to this live, or you're tuning in on a replay, then please do put your questions on whichever social platform you're tuning in on, and we can actually sort of like bring that up on the screen for these guys to answer, because these are the clever chaps. So we're just going to sort of go around the room and just do sort of like a quick introduction of everybody, and then we'll sort of like dive into the questions. So James, do you just want to sort of let people know who you are and what you do?
Yeah, thanks, Paul. Good to be here. My name is James Blacklords. I run a commercial finance brokerage called JB Commercial Finance. I've done for the last 7 years now, and I help businesses and property developers find finance relevant to their needs.
Perfect. And Rob, do you want to go next?
Yeah, okay. I was an independent financial advisor for about 1,000 years, roughly, or at least half a century. I've become a financial educator, so I give guidance and information on financial matters. And people do a money awareness course with me to learn how to invest for themselves. Thank you, Paul.
Okay, and last but not least, Neil.
And I haven't been doing it for 1,000 years, but I'm an independent financial planner, co-founder of Watson Kirby Me. 2 years old as a business in 2 weeks. So very close to that, a milestone. We help people with their pension savings and financial planning for the future, but on a regulated side.
Excellent. Okay, well, thanks for joining me today, guys. The general question we're going to kick off with really is, what's the current climate in the finance world from your perspective? Because there's a lot going on around the world, as you know, and obviously it's going to have an impact on, I guess, every country in the world at the moment. So I just thought we'd kick off with that and just sort of like get your views on where you think we are currently, what you think is likely to happen in the future, and what sort of things can people that are tuning in, do to mitigate any circumstances or any things that are going to happen over coming months. James, do you want to kick off from your perspective in terms of what's going on in your finance world?
Yeah, thanks, Paul. Obviously, my kind of crux is really on the business finance side of things. And particularly in relation to borrowing money and lending money. And the climate at the moment is slightly skewed by the fact that we've still got the end of the government lockdown COVID loan scheme. So the recovery loan scheme, which was the big brother, if you like, to the Cybils and the bounce back loan scheme, is running to the end of June. And a lot of lenders, there's over 40 lenders participating in that, including all the high street banks, plus the big fintech lenders. And I think the key thing is going to be what happens after that runs off. Because about 80 odd billion pounds lent under the bounce back loan scheme, we're already seeing signs that a lot of that's starting to go a little bit wrong. The governments aren't fulfilling their guarantees to the banks on certain occasions. So I believe that the high street banks are going to run slightly scared of lending money to clients. And it's going to come at a time when a lot of the amount of days payable is going up. There's a lot of late payments, a lot of businesses failing. So I think if you're a small business at the moment, you're going to be really, really wary of your cash flow going forward for the next 6-12 months. You've got to know who's paying you, when they're paying you, and make sure that your debt recovery is in really good order. So I'm reasonably positive about things, but if I was running a small business at the moment, my advice would be have a look at the recovery loan scheme, look at your cash flow, make sure that you've got it in order, and talk to experts like you've got in this room and beyond, because that's going to be the real key over the next couple of years, I believe.
Yeah, it's a little bit, I guess, battening down the hatches, isn't it? And just sort of like keeping an eye on things more so than you probably would ordinarily, I guess.
Yeah, I mean, it's that word that we all hate in the financial marketplace, isn't it? It's uncertainty. We all hate it, whether it's good, bad, or indifferent. If we don't know, we panic. And I think that if you've got the opportunity to get some funds in the bank via making sure that you're offering lower repayment terms, so you're getting your funds in quickly, or if you're getting some finance in now, even if you don't necessarily need it in the next 6 months, if you can get it in and you know it's going to be there, as a backup, as a slush fund, if you like, I think it's probably a good time to consider that at this moment in time.
Okay. Yeah, sorry, Neil, I think you disappeared off the screen for a minute.
I'm back.
Roger Eddowes has just joined us in the studio. I'm not going to bring him on screen at the moment. Hi, Roger. So you can only hear us at the moment, but thanks for joining us. So, yes, Rob, what from your perspective then? Because I guess you're more about the, individual investor rather than the company side of it. So what are your thoughts on the current finance climate and how it's going to impact people? Are you there?
Okay. I had about the Third World War. And my question to him was, well, how would your attitude, how would your asset holdings, how would your portfolio change if you heard or you gather that the Third World War was just around the corner? And that, I think, is quite an important question, because we, for longer term investment and traditional investments, but I wonder whether there's a time for thinking, if I need a Third World War is going to come, do I need to invest money with governments rather than with actual business? And that would mean lending money to the British government by buying gilts and government bonds across the globe, maybe, or certain with the major economies. So that would be my thought, to be on the alert for changes. And sometimes the diversification model will not always work if the it's going to be as extreme as the Third World War. Sorry to be so heavy, but we need to be real, I think, about the threats that do stand up before us. So hope that's a thought anyway for you.
Okay, Neil, what are your views, and where do you stand on the current climate?
Well, I suppose equally similarly, looking after typically people, individuals rather than businesses, but equally I do look after quite a lot of business owners, so a bit of a mix. But I guess the thing that tends to grab the headlines at the moment is the squeeze on households. Now, we look after people who have plenty of money and don't have to worry about inflation per se, but equally there's a lot of people that do, and I dare say there'll be people watching this that do. So the national insurance increase, or whatever they're actually calling it, the 1.25 that we're all going to bear, and businesses bear as well. So it's almost similar to what James was saying about kind of it's difficult year, I would say, ahead, at least for people. That being said, there are still opportunities to make your money work for you. And I have to say it, but today is the last day of the tax year. So if you have a business owners, as much as anybody, if you have some money and you have the cash available, etc., and it's appropriate, consider doing something today, because today's the day. You still have time. And that being what I'm trying to say there is basically there are ways to maybe save some tax or put your money in a tax-friendly place. So as your expenditure levels or whatever, or your income takes a squeeze, then you might be able to take opportunities from elsewhere by using those various allowances. But today is the day.
Okay, last minute warning there. So what do you think is going to happen with inflation? What do you think is going to happen with interest rates? And what impact is that going to have? Rob, I'll come to you this time. What do you think is going to happen over the coming months and possibly years?
Okay, well, in my thousands of years of being within the financial world, I've been there when inflation really rocketed. I recall even selling 5-year, they were Tessers, I think, originally, as opposed to Peps or ISAs, selling Tessers for a 5-year term, wait for it, with a fixed interest rate of 13%. Wow! If I could do that today, wouldn't you be pleased to do that, Neil? Somebody, a 5-year bond with a 30, whoa, stone the crows, whatever. Wow, okay. Will those times come back? Do you know what? I wouldn't be at all surprised. I think the inflation tiger, if you like, when it gets out of its cage, is very hard to get back. I really do. But the impact on that, of course, is that, you know, we're coming out of COVID and all that sort of thing. We need to stimulate the economy. But we also need to raise interest rates to offset inflation. So the very tricky balance between raising interest rates at the right, cautious, thoughtful rate and not getting that wrong is awfully important in terms of how we move ahead and whether we can all survive from a financial viewpoint, really. So, you know, 13% on your money, that would be lovely. But listen, it wasn't really, because I reckon inflation was nearer 15% at the time.
Yeah.
So it didn't mean quite as much as it sounds.
James, what are your thoughts?
Yeah, I mean, obviously inflation at the moment is over 8%, and it is around even higher in other parts of the Western world. And as Rob alluded to there, I mean, as an economics graduate, you're taught that the major government tool to control inflation is raising interest rates.
Yep.
And that's all very well and good, but at a time when the cost of living is obviously going up, and we're coming following post-Brexit, post-lockdown, I don't think that a government raising interest rates by even 1% would go down very well with the electorate at this moment in time. Hence, we're seeing this, even though we're still at a historically low base rate, we're seeing this creeping up rather than anything else. So it's a really, really tricky position the government find, as Rob correctly says, because how do you balance a cost of inflation increase following the massive amount of quantitative easing we've had in the last 2 years to inject money into the economy? How do you balance that without using the traditional tool at your disposal? I'm not quite sure it can be done. Hence, I do think we are going to see a period of quite relentless inflation for a good 2-3 years, because I can't see how we can control things. With the last government were elected in 2019, decisions they make now are going to impact on a re-election. So I can't see base rate going up to, a lot of people talking about it going back up to 3-4%. I'm not sure that will happen, because certainly not in the short term. Because if you think about it, if you've got a 200 grand mortgage, even a base rate increase by 1% is going to cost you $2,000 a year. And as a family, that's a hell of a squeeze. That's probably more than your wages are going to be going up in that time. So it's a hell of a balancing act. And the government, HMRC and the Treasury are going to have to be incredibly creative the way they actually manage this situation. Because I can see a period now of certainly a couple of years of inflation at the sort of level we're seeing at this moment in time.
Mm-hmm. Neil, what are your views?
Yeah, I guess I'd echo a fair bit of what's been said, but equally agree with James latterly there on our view expectation is that interest rates do rise, but the governments, the taxpayers, they cannot afford that. I don't know what the stats are, but every time the US puts their interest rates up, the extra cost of their economy is massive because the debt is huge. So, and like James said, equally, the cost of living squeeze on all those individuals, UK, US, wherever, is massive. Adding that on, it won't bring that inflation down that markedly, in my view, because the inflationary pressures are not necessarily interest rate linked in that historical model. Not saying it won't have an effect, but it's not going to drive them down to the effect that they might want it to. But equally, I think some rises coming is to be expected. But like James said, again, going anywhere north towards 3, whether that's US or UK or Europe, I can't see it. But I equally don't almost want to, on the basis that the affordability for people's livelihoods, and it won't have that desired effect on inflation, in my view.
Is there anything else that the government can do then to try and get a hold of inflation, do you think, Neil?
Short term, probably not. I think I'm not read if Boris has released the energy strategy or whatever it was actually called. That's obviously having a big effect on inflation, as in the energy side. So there are more medium, longer term things I guess they can do, but I can't see anything short term. They can't reduce the interest rates to have a potentially opposite effect. Energy prices are where they are. Cost of stuff is just going in one direction. And I guess interest rates, if they do stifle or reduce demand, that's not going to help people with the price of milk going up by 50% or whatever it is from May, etc. Yeah. So I think with James, again, just what he said about we're going to have to probably live with higher inflation than the government's target of 2% for some time.
Yeah, exactly. That Paul, if I can just jump in there, I think. One of my background concerns is that, as you're saying, Neil, really controlling inflation, even with increasing interest rates, isn't really viable currently, really. And I think that's awfully true. So that then leads me to ask, is there going to be a housing crash? Because interest rates are going to have to rise. Inflation will be rocketing. People's salaries will not keep up with inflation. How will they manage to meet their mortgage payments? And then we start to get the housing market crashing. And of course, the UK market is uncomfortably dependent upon the housing market and the rather false high valuations of property that we surely have now.
Mm-hmm. Well, yeah, I'm old enough to remember sort of like negative equity and high interest rates.
Me too. Exactly. Yeah.
I'm not quite 1,000 years old as Rob. So probably the next in the chain. So back to you, James. During lockdown, the government tried to sort of create products that would, help businesses go forward and move forward. And you mentioned the latest thing. Do you think they'll do anything else to sort of like help businesses that are going to be experiencing these sort of increased costs, particularly with fuel and energy?
I don't think there'll be any products per se. I mean, certainly around where I am in Leicester, the last of the grants have all been issued now and paid out. I don't anticipate any further grants. I certainly don't anticipate an extension of the recovery loan scheme or any new product to replace that at all. I can't see that happening. So I think that the government are very keen now to draw a line under COVID. We're seeing that in their policy with regard to health. We're seeing that in policy with regard to their policy on taxation, and we're seeing that with regard to their policy, I think, on support to businesses as well. So I don't think there'll be anything else. The only way I can really would like the government to get involved is further assistance with regard to late payments. I've said all along that I believe that cash flow is really, really king at the moment. I said that earlier. And I believe that people take advantage of that. Certainly bigger companies have had initiatives about this that companies have signed up for, and yet we're not actually seeing evidence that it's helping the SME who have an increased debtor book. They have more and more people lending them money. So I'd love to see some help there. I'd also love to see some more encouragement for SME owners to employ people and make it easier for them to employ people. The Kickstart program, I believe, has been a pretty good success. And I think that kind of initiative, that sort of more kind of wider economic initiative that helps small businesses rather than something direct like a grant or a loan is probably going to be one, more beneficial, and two, more likely to happen because it's going to have less initial cost. Because for the next 5 years or so, the government are going to be paying the price for the bounce back loan scheme, which could be likely to lead to several billions pounds worth of HMRC money getting flushed away. So I don't think necessarily be direct help as we've seen over the last 2 years, but I certainly think there should and there will be a lot more kind of wider help to help SMEs make their lives easier, take people on, and let's see what happens to things like making tax digital. I'd rather that was put off for a couple of years more as well, and that sort of thing. Let's make it easy for people to start businesses. Let's make it easy for people to employ people. Let's make it easy for businesses to grow and then contribute via corporation tax, PAYE, NI, rather than just take short-term measures. That would be what I'd like to see.
Okay. And in your world, Neil, do you think there's anything that'll change drastically with either products that are on offer or how people are investing their money?
Can't see it. I mean, the government, I was just thinking of what James was just saying then, the employment allowance, which is the allowance that you can effectively not pay employers' national insurance, went up by £1,000. I think that sort of initiative, there's no, in my mind, short-term major cost from the government. But if you're thinking, I can employ someone and not have to pay national insurance for them for a bit, at least that could help. That sort of thing, I think, is quite valid and helpful. Us as an employer, that's quite a nice minor bit of assistance. But personally, the frozen income tax bans, they've chucked on this extra NI. They're tinkering around, in my mind, and things are getting ever more complicated. I think James's point on like the making things easier, adding extra rules, extra layers of complications, like with the council tax, £150, and there's so many things that there's quite a few things that they've tried to do the right sort of thing. But is it adding complexity? Yes. Is it actually going to make much difference to some people? Probably not. So rather than making it more complicated, maybe simplify. But I just can't see them doing much more. I mean, all the allowances, like I said, whether that's contribution allowances or, say, tax earning allowances and that sort of stuff, are frozen and have been frozen for so long that, and taxation, I think I'm pretty sure I've read that the level of taxation in the UK now is its highest for a long time. I don't know what the period was, but, but I can't see them necessarily changing too much, sadly. I've just seen a question from Roger.
I'll bring Roger up in a minute. What about you? Do you think there's any tools or things outside the norm, if you like, the normal toolbox they have that they can bring to the party?
And I'm not too sure. I guess for me, there's a bit of a shift, but a bit of a push to make sure people are aware, I guess, of what they can do, what they could claim. It's difficult with the world we live in with fake news and everyone looking at all sorts of different social medias and news channels and yada, yada. But just trying to inform people about what they could do. I don't quite know how, but because there'll be so many people who don't take use of whatever those allowances might be for them, whether that's tax credits or extra pensions or contributions or ISA, whatever. But just trying to make it easy for people to understand, because personal finance is something that quite a few people just don't understand, don't like it, are fearful of it. And if they are in that sort of space and don't understand it, then they're probably losing out on things that they could otherwise get. So I don't know whether that's through like Citizens Advice or just a few more advertising-y type campaigns to try and make it clear for people. Because I think if they knew some of the stuff they could do, I say they being generically, then they probably would, if they knew it and understood it, take advantage, and it probably would help. As opposed to them coming up with more schemes, just help people use the ones that are there already.
Okay, Rob, from your centuries of experience, what would you say? Is there anything you make them pull a rabbit out of a hat to sort of like help with the current sort of situation?
Well, no. In fact, I mean, I'll speak out of the box if that's all right for a minute. I normally do, you know. My fundamental question would be: will capitalism survive? You know, when you have furlough payments, so people being paid to stay at home, it's jolly good. It's very necessary. I'm not against it at all, but I am wondering what shape capitalism is going to end up. You know, and Neil, you're quite right. There's all kinds of benefits that people don't take that will help them. But when people do take benefits to support themselves now, there's a price to pay for that later, isn't there? And are we going to go on being able to support people left, right, and centre with extra £150 this year and furloughs there and so on? So, what is the shape of the future? Will the political scene change? You know, I often think to myself, when we look at longer term investment, you're setting up a pension plan for somebody, perhaps Neil, and in the financial world, just in normal, and you're looking 40 years ahead, and you've got global warming hitting you and all kinds of things like that. So my mind sort of stretches out to a broader picture. And I tend to also want to say, I'll drop in quickly, some of the students of my money awareness course have recognized the volatility of various kinds of assets. And to help themselves through these more difficult times, they are looking at taking profits from the individual assets within their portfolio. So a quick example of that would be somebody investing in funds investing in gold shares and so on. They made a 12.44% return over the last 4 weeks, ending the middle of last week. Now he could actually press a button on his computer, and on the £3,000 he's got in that section of his holdings, could take, I think it was £440 out of his and put it into his bank to pay his bills now. So that's different kind of thinking, I'm sure, and it's not traditional kind of thinking. But if the world has changed that much, if it's going to change that much, do we need to begin to think differently about what we're suggesting that people do and don't do? Because I don't suggest, I just put ideas out there and we debate, we discuss, and people do their own thing with their own money. But there we go. Hope that helps or doesn't help. I don't know.
Well, it's out there. It's out there in the big wide world now. So Roger, thanks for being patient. So Roger's Edos from Essendon Accounts. I think he's going to be on these in the future, hopefully. If I send him the link so he can book on, which I probably haven't done yet. So his question to the floor is: will Rishi go ahead with a basic rate tax cut in 2024? James.
Golly.
James, what's your view?
That's honestly, I think I highly doubt it. Albeit it's an electoral promise, isn't it? So it's going to be that classic balancing of politics v economics, which we see so often. I don't think so. I can't see us being in a position where we're going to see any personal tax cuts, or business, to be fair, any personal tax cuts for the foreseeable future. I think that the hole that's been dug HMRC, or not Doug for HMRC by the COVID, I can't see it. The answer for me, it would be a no.
Neil?
Yeah, ditto. As much as I'd like to see it, albeit it's another complication probably to think now what's happening again. I can't see us being in the position. That being said, we don't know what's going to happen, but I'd go with James. It's unlikely.
And Rob?
Well, I just scratched my head. I don't know the numbers, but a penny off income tax, what real difference is that going to make to me or to you? It's not a lot, is it? It can't be, can it? So I don't bother whether he fulfills his promise or he doesn't fulfill it. Actually, I just don't see it making a huge difference anyway.
Okay, so
I don't know whether Neil's got a different view on that. It'd be interesting. No. Okay.
No, we've got to whatever degree balance books is the term, and corporation tax has gone up or going up rather next year to rather heights that we've not seen for a while. So just as a general, UK tax position versus expenditure, etc. You're right, Rob. To an individual, a penny or whatever cut might not make the end of a massive difference. But I'd sort of personally rather see that other measures are taken to help as appropriate, and we start to balance the books because we're heavily indebted, aren't we? So,
yeah, very much so.
Might take another 1,000 years to get out of this mess, Robert.
I hope that I'm still here to comment in that case.
Well, you might be. Someone else will be running these, though. Hopefully that answers Roger's question. So I guess we've sort of like focused a lot on, I guess you could argue sort of like the negativity, I guess the reality of it to be fair. Roger's just put, I think the general public will see through the 1% gesture too, and he shouldn't do it as it won't make things better. So, so my view is that, small, but a lot of businesses have managed to sort of like get through the last couple of years with all the restrictions that have been, particularly in the hospitality and leisure and other sectors. And I'm sure you guys have seen it, and Neil, you started your business inside of lockdown. So, it is possible to sort of get through whatever's thrown at you. Do you think that the SME market will still be quite buoyant in terms of new businesses being created? Hopefully not too many businesses failing, or what do you think the likelihood of that's going to be? Rob, what do you think?
I only half heard your question, Paul. I'm sorry. My mind drifted. Apologies.
You're having a better time in your head, were you?
Well, I was a bit. I was just getting into my previous thought pattern. I'm sorry, Paul. Yeah.
Shocking state of affairs.
Dreadful.
The essence of it is, what do you think the sort of small business world will look like? So will there continue to be around 5 million small businesses going forward? Will there be less? What are your feelings,
My instinct is to say I think there'll be even more small businesses than there are now. And that will be partly, I think, because the world is changing around us so much that employment patterns are going to change even more than they have. And I think the frustration with people, I remember one person who joined me some years ago, even in the financial services world, I don't know, he'd gone after fairly senior jobs, and he'd gone from one job to another, to another, to another, as the economy turned. And in the end, he came and joined me and wanted to be self-employed, because then he was in control of his own future. And I think for that reason, if for no other reason, people depend upon themselves ultimately. And for that reason, they'll go and do their own thing.
Okay.
So there'll be more small business and startups than there are now.
Okay. James, what are your thoughts?
Yeah, I mean, the stats kind of back that up as well. We've seen record numbers of limited companies being set up during lockdown. And I think there's a lot of truth in what Rob says. I think people, one, have realised that actually you might need to take some control of their own financial futures. That may be via, what we commonly call a side hustle, alongside their main employment with a view to that becoming their main wage earner in the future, or them setting something up with a view to just moving fully away from employment when the time comes. I think a lot of people have got used to working from home, and now they're being drawn back into the office, being forced back into the office on many occasions. They realise, actually, I quite liked working from home, and the only way I'm going to be able to achieve that going forward is to take control of my own destiny and work from home. I think people also realise that their jobs weren't maybe as secure as they thought they were. Furlough and the threat of redundancy for hanging over a lot of people's head for a year and a half has made a lot of people think maybe I've been here 2-3 years. They were prepared to send me on my way for a period of time. Crikey, you know what? Actually, I might need to again take control of my own destiny. And the final thing I would say is people have realised that life's too short. They spent a lot of time with their family, a lot of time with their friends, a lot of time at home, and they thought, you know what? Actually, I've been working 60 hours a week in the office. I think I might like to do this myself, get a bit of a better work-life balance, use my own time for myself, have a bit more of a 24/7 world rather than just working between 8 and 6. And I think a lot of that's kind of filtered through to the people who have been in employment a long time, and they're looking to start a business, use their own redundancy payments or an inheritance to start a business, or just do something on the side. So I think as Rob correctly says, that the whole pattern of employment is changing, and I think COVID's really sped that up. So you know what, I think it's a natural evolution rather than anything else, but it's been sped up by COVID. So I think it's good. I think it's positive.
Yeah, we touched on how technology had impacted small business on one of these previous sessions, and how that sort of sped things up in terms of remote working and using platforms like this a lot more to do business. Neil, what about you? What are your thoughts on the future of the SME world?
Yeah, I echo all of what's been said and definitely support. And I think the tech has definitely helped. James is right. I've seen quite a few people, personally, about made redundant, having been at places for a long time, never quite thought it would happen to them. Now, the job that was uber secure is now not, and they're looking at what their options are. And I think taking control is definitely right for some people, but equally, there's a whole lot of people that don't want the risk. They see it still as a big risk, and don't feel like they've got the expertise, perhaps. But I think the world of tech and working from home and really good professional services companies out there that can help people get off the ground and get going quite easily. So yeah, I really support it. And like you said, Paul, yes, we started recently, relatively. And there's lots of businesses like ours that have thrived, say like ours, but like us, that have thrived through this. And even if they're in industries that might have had a tough time, there's often a good time to launch when it is tough. So yeah, I'd love to see more joining us collectively as small business owners, because it's a great place to be. But equally, there is often a lot of, on LinkedIn or whatever, this is great, isn't it? And actually, it's hard work. So people can't forget that. But equally, it can really change people's lives. So I really hope it continues.
Yeah, me too. Me too. Absolutely. Because small businesses do contribute a significant part of UK PLC. So,
we're frozen.
Those new businesses, I guess, more success than ordinarily would be. So any final comments from any of you, any sort of like last minute tips, advice, or comments to give before we go? Rob, have you got any last thing you want to say while we're online?
Well, just if anybody's listening and they're in a workplace pension, and they're in their 50s and so forth, I think you'll probably still find that automatically your pension funds are moved from equities into government loans and gilts and so on. And there could be a danger in that. I noticed that one just pure government gilt fund fell by 6.7, or was it 7%, in just the last 3 month period. So if you're getting close to retirement, is that where you want your money? It's automatically being moved into that kind of sector. So just go and ask a question or two about where is my money now, please, and is it really in the right place now? Okay, that's a quick thought.
Okay, thank you, Neil. Any final thought, comment, advice from you?
I think it would just to be reiterate the day that it is today, last tax day of the last day of the tax year. just go to, if you know, use your ISAs, use your pension allowances. If you're a business owner, you can make pension contributions, or your company can on your behalf. There's lots of things to contemplate, and just try and make use of them, even if it's modest. My general piece of advice, as it were, would be, if you can afford it and if there is an allowance, try and make use of it, even if modest. That would be my parting thought.
Yeah. If anybody's listening on replay or on Dave, it's not. It won't
Sorry,
be,
yeah.
won't be the last tax day of the year. It's the 5th of April we're recording it, so don't be.
Fair play.
We just had a John make a comment. John Beek, who's tuned in on LinkedIn, just sort of totally agreeing about the side hustles and small businesses and the less satisfaction as an employee. James, any final thing from you? Thanks for your comment, John, by the way.
And, obviously, again, mine is generally business finance related.
Yeah.
As I think it's the third time I've mentioned now, cash flow and making sure you get paid what you due, and having some robust systems in place to ensure payments are being received on time, and not giving extra credit to people just because they're a nice guy or they've always been okay or something like that. But on a slightly more sort of focused route, as I mentioned earlier, the recovery loan scheme is coming to an end, and after that, the kind of unsecured loan marketplace is very uncertain. The fintech lenders are all sort of, waiting to see what's going to happen to the likes of the funding circle and that sort of lot. And I think banks are going to lend a lot less on an unsecured basis. So my advice to anyone is, if you do think that your business is going to need some working capital finance, for whether it's for a property deposit, whether it's for an asset purchase, whether it's just simply working capital, then please do look at this scheme and look at it over the next few weeks, because it may be a last good chance to get some money in your business for the next sort of, the next year or two, and you won't be able to go back and apply. So look at it now, get on it now, and see if it's something that's applicable for you.
Okay, excellent. Thanks a lot, guys. The next focus on session that we're doing will focus on sales and marketing, and in particular, we're looking at with the experts that will be there on that day. What is the best place for SMEs to sort of invest their sales and marketing budgets? So hopefully you guys can tune into that. So thank you, gentlemen, for your time today. We'll end the live stream there.